All right. Good day, you all. This is the Billionaire Mentor again. You're welcome to this class. So as we have been looking at the topic support and resistance. Support and what resistance. So what is support? Basically speaking, support simply means the base, something at the floor level. You understand? Something at the floor level, that is what we call support. While your resistance is what something what's at the peak level or at the top. This is basically your support and this is your resistance. Now, in other words, or to make it even much more easier when you are on your chat or when you are chatting. Let's assume this is our current price leg. This is the current level of price. Once price tests this level, this is the current price. Once price tests this level here, it simply means this level has become what? Your support level. Meaning, we don't expect price. We don't expect what? We don't expect price to come lower again, lower than this level. We expect price to bounce off from this level. Basically speaking, this is our basic support and resistance. So, when price gets here, do you understand? When price gets to this other level up here, now this place here, price is said to be below your resistance level. Do you understand? Most times, any zone you draw out and then your price is below it, that zone is currently what? Your resistance level. As simple as it is. So this same resistance level this same zone that we identify as our current resistance level, this zone here, is anything that makes price breaks above it is no longer our resistance level. It has now become our support level. Why? Because price is now currently above it. Do you understand? Price is what? Currently above it. So in an ideal settings, we don't want price to break above our resistance level. So we don't want price to break above our resistance level. The same way we don't want price to close below our support level. So ideally speaking, when price gets to our support level, price tends to bounce off. Then when price gets to our resistance level, price tends to bounce off. Do you understand? So in the trading system, basically speaking, we expect to sell at a resistance level. When price bounces off, then we expect to buy at what support level when price bounces back. You understand? Either this is just the basic concept of what support and resistance. I repeat, the basic concept of what support and resistance. Now, having known these basic theories, those dive a little bit deeper, still on the basics anyway. So now we have a normal price action. Like you all know, we never keep on getting consecutive higher highs and higher lows in the market. Price will definitely not give a particular price pattern. Price will definitely not give a particular price pattern. So definitely wants to go up, come down. It's going to be irregular. That is the dynamism of price action. So what's irregular? Do you understand? So when you find yourself in this kind of market condition, when you find yourself in this kind of market condition, what are the things you want to do as a support and resistance trigger? The first thing you want to identify, okay, like I was saying before, I said there are 3 ways that will actually help you, or 3 things to watch out for that will help you to easily map out your support and resistance zone. The first thing, in no particular order actually, is your consolidation. Then the next one, look out for your swing points. So historical points, these are places where the price actually was tested at least twice. Do you understand? So for consolidation, we have not gotten any consolidation yet. So what I'm going to look out for next, the swing points. I have my first swing points, I have another swing point here. This is the swing point, this also is the swing point. Here, all these edges. You can see how basic it is. These are just textbook basic price actions. So for it to be very, very easier for us and get a grounded perspective in the market. So you want to identify the swing points from here. I don't use line. I don't use line to identify my support. You can actually use that if you want to. I don't use that. I already told you guys on the previous class we had. the reason why I don't use lines for my support and resistance. If you like, you can actually use lines. It's not bad. So, but basically, the reason why I don't use lines, my school of thought for not using lines is because support and resistance is actually not a particular point. It's not a particular point. It's actually a zone. It's a level. Do you understand? So, imagine me using line. Yeah. How many places I want to accommodate this touch? Let me make the lines a little bit bolder so you guys will see it. I would want to accommodate several touches in the market. I want to accommodate this touch here. I also would want to accommodate this touch here. Then I can see another touch around here. Then I can see another touch around here. I can also see another touch around here. I can see another touch around here. And the likes like that is going to make my chart look very, very unorganized and scattered. So I wouldn't want this type of mess on my chart. I wouldn't want this type of mess on my chart. And you can use this if you actually want to, but it's quite rough and it's a little bit convincing to confuse me. Might not confuse you, but definitely confuse me. So I don't do that. I decided to adapt or to adopt using rectangles based on the fact that I understand that psychological levels are not just a particular point, they are zones, meaning not just a number, it could be ranges, numbers from 1 to 10, 1 to 15, that's what I'm talking about. So basically speaking, these are you draw out your support and your resistance. These are you map out your support and resistance zone, or support and resistance level. Sorry, let me take this off here. Yeah, I don't need this one again. Now, basically speaking, these are you map out your support and your resistance level. Now, let's make proper analysis on how we got all these levels. We will easily see or note that we have one touch here. Based on our definition, we should have at least 2 touches. Yeah. So we have the first touch here, we have the second touch. This simply has established a historical data point, meaning this is a psychological level that traders, big traders, institutional traders are looking to trade off from. You understand? These are psychological levels that big traders, both retail and institutional traders, are looking to trade off from, either to trade away or trade against or trade to. So this level price would most likely react from this level. Whenever price comes down to the level again in the future, you can see here at this speaking, price came here and also touched here. So perhaps in the future we could actually get something like breakouts and retest, then continue dumping, or price might just be fast from here. Do you understand? So but price should, or in most cases, react from every psychological zones. Now, to this point, what validates this place as my support or resistance zone is because number one, it's actually the same point, number one, then it actually has 2 reactions. Do you understand? It gives an historical validation that this key level or this point, this psychological level, this support and resistance level is actually a point whereby the big banks, big levels, big boys, most traders are looking up to trade out from. Do you understand? So it's very, very simple. We also have this reaction point here, we have another reaction point here. You can see here now, when price got here to this level, it's actually blasted this level. Yes, it happens a lot. That's why it's as simple as we know that we have an entry criteria, do you understand, to know if you are to buy from the psychological level or not. Do you understand? So those who look at the future lessons or in our future classes. So let's just continue with the basics of resistance. The idea is that is either price breaks through it or price was respect your zones. Do you understand? Price definitely was most likely respect your zone. Let's say 80% of the time price will respect your levels if they are properly drawn out, and depends on the kind of time frames you want to draw your support and resistance on. We take us to the types of what support and resistance. Let me see, we have different types of support and resistance. We have the dynamic zones or the dynamic support and resistance as S&R. Other dynamic support and resistance, we have the major support and resistance, we have the minor, we have the fragile support and resistance. Now, this should take us to what do we use all these types of support and resistance for? What do you use them for? What do you use them for? Number one, this dynamic support and resistance that is mostly, in fact, should always be drawn on a monthly time frame. The dynamic support and resistance should always be drawn on a monthly time frame. That's your monthly TF. This is your higher time frame. Yes, you know that the monthly time frame is your higher time frame. Higher TF. Or those representing higher time frame as HTF next time. So HTF. Then your major support and resistance is mostly drawn on weekly or the daily time frame. I'll explain. The weekly or daily time frame, which is also your higher time frame. This one higher time frame, yes. Then your minor support and resistance. Minor support and resistance is mostly drawn or should be mostly drawn on your 4-hour or your 1-hour time frame. Now these are your lower time frame. Then your fragile, which is basically for our entry, is always drawn on either on 1 hour or the 15 minutes time frame, which is also basically the lower time frame. You understand? So basically speaking, you don't want to be drawing your minor support and resistance on the monthly time frame. You don't want to be using your monthly time frame or your weekly time frame as your entry criteria. No, you don't want to do that. Do you understand? You don't want to be drawing. Basically speaking, your higher time frames are just for execution, just for directional bias. Do you understand? You want to trade alongside with the trend. How do you identify the trend? You identify the trend of the higher time frame. You identify the trend of the higher time frame. If the higher time frame is saying bullish, your higher time frames are basically the monthly, weekly, and the daily. If your higher time frame is saying bullish, you don't want to be caught selling the lower time frame, except you want to go against the trend, which I will always talk against. So sometimes your higher time frame might be, I'm already going to the top analysis. Let me leave that for the top analysis class. We have that very soon. So your major support and resistance should always be on either the weekly or the daily time frame. Now the reason why I said weekly or daily time frame is sometimes when you open to your weekly time frame, it might not be very, very clear. It might be clumsy. So you are permitted to drop down to the daily time frame to map out your support and resistance zones. After having getting your support and resistance zone on the dynamic zones, which is your monthly time frame. So once you are done with your monthly time frame, you are expected to drop down to your weekly time frame or your daily time frame. If your weekly time frame is not clear enough, drop down to your daily time frame. You take the one that is clearer. The one that is clearer is what you want to actually draw out or map out your support and resistance from. Then from there you move to your minor support and resistance. Minor support and resistance, your minor support and resistance should always be either on the 4-hour time frame or the 1-hour time frame. It will be in between also. You could actually find it easier to map it out around 2 hours time frame, 3 hours time frame. That is just depending on you if you want to add the landing to it. But basically speaking, the mechanical strategy of drawing out or mapping out minor support and resistance is either on your 4-hour time frame or dropping down to your 1-hour time frame. Anyone that is clear to you, use those, but don't go lower than 1-hour time frame and expecting that you are going to be getting your minor support and resistance. No. While your fragile is basically for entry. You can decide to use your 1 hour as entry time frame or use your 15 minutes as your entry time frame. Do you understand? These are execution time frames. You don't want to go lower than 15 minute time frame, except when you start scalping, or which I might explain later on. It's just very, very simple. So dynamic time frame is basically for your directional bias. Your major time frame also is your directional bias. Or your minor support and resistance is basically to understand the structure, to align your trade now. Because sometimes when you're on the higher time frame, you get something like I which simply means it's your uptrend. However, when it gets to the minor time frame, in the monthly and the daily weekly time frame, you might be getting your bias as an uptrend. But when you drop down to the lower time frame, which is your 4-hour time frame or 1 hour time frame, you might be seeing something like a downtrend. just understand, because your higher time frame is an uptrend, like you drop down to your 4 hour time frame, 1 hour time frame, you see that trend does not mean your trend is now bearish. No, it simply means you are seeing your consolidation of the higher time frame on the lower time frame now, retracing or correcting itself. Because like we have the impulse movements and we have the correctional movements. You have the impulse movement and correctional movement. So on the higher time frame, when you're having your the proper uptrend, when it comes to your lower time frame, you might be seeing the impulse movement. So don't mistake this impulse movement as what? As the retracement, sorry, as the downtrend. It still basically was an uptrend. What are you meant to do? You are going to wait. You will wait until the lower time frame aligns properly with the higher time frame. Simply means you wait for a reversal pattern. I'm not using my entry yet. I'm just giving this to protect you or just for stopping sick. So your minor time frame, basically speaking, when your dynamic and your major time frame are both bullish, your minor time frame sometimes could give you bearish. This does not mean the whole trend is not bearish. No. So if you start looking for selling, no, I would not advise that. What you're going to do, wait until the trend, the lower time frame aligns properly with your higher time frame, then look for what to buy its continuation to continue the upside. In contrast with your downtrends, which your higher time frame, which are your monthly, weekly, and daily, are pointing downwards. You don't want to be caught buying when your higher time frame is going bearish. You don't want to trade against big boys. It's not ideal. You can do that, but it's not ideal. I will not encourage everyone to do that. You understand? So you actually wait until the lower time frame now aligns properly with the lower time frame. You have to wait, the higher time frame. You have to wait until your lower time frame aligns properly with the higher time frame. You understand? Then you wait for your entry criteria, then you enter. So that'll be all for the textbook pattern. Let's now move to the textbook. So what am I saying? The live charts. Alright, so we are now on the charts. Don't forget, when we want to actually draw out support and resistance, what are we going to look for? We are looking out for what? The consolidation, the swing points, and what historical points. Do you understand? We want to look out for our consolidation, our swing points, what historical points. Okay, let me explain the consolidation. Let me give you the consolidation before I move to the live chart. If you have something like this, this here was the consolidation. You can see. See, this point here is what we refer to as what consolidation here. You can see this consolidation here. This is also a consolidation here. You can see consolidation, and what's consolidation. So that is basically our consolidation. So they are also regarded as reference points or institutional levels or psychological levels, or anything you want to call it. When you see them, it actually helps to make it easier for you to identify your support and your resistance zone. Basically speaking, some people call it supply and demand. Well, I'm not using supply and demand yet to get there. Don't worry. So it will actually help you to easily draw out or map out your support and your resistance levels. Very, very simple, right? Now let's go to our charts to see what we have. So basically speaking, when you want to draw out your support and resistance, you want to shrink your chart, but not to don't make it too jam-packed. You just want to be able to see the whole chart. You don't basically need to see the chart. You can do something like this. But just to be able to get historical standpoints, something like this. I can see my reference points here. You can see another zone here. I can see another zone here. Yeah, don't how will I say it? Don't be too hard on yourself when you go to the chart to say you want to map out support and resistance. Yeah, doing this in just how many seconds is actually not a big job. Very soon you also be even faster than I can do, or I am doing currently. You understand? So you don't actually need to be you don't actually need to be a perfectionist when you are doing this. Just make sure you accommodate as many touches as you can. Make sure you can accommodate as many touches as you can accommodate on the chart. Or you don't need to be perfectionist when it comes to support and resistance. That's what I'm using line. If you're using line, you want to be talking about perfectionism. So this is just giving out a range. So you can see how do I identify them. Then you don't want to be doing, I don't want to do something like this is dynamic zone, this is a monthly time frame. Don't forget what we are actually mapping out on a monthly time frame. So you don't want to pick everything. You don't want to do something like this. You don't want to do something like this. Yes, there are several considerations. You don't want to do all this. You don't want to do all these things. No, you don't want to. You don't want to do this. You don't want to do something like this because it will be tempting to see different reaction points. Just pick the ones that are very, very obvious, the most obvious ones in the market. Is what you actually want to pick out, pick from. So once you are done with your dynamic support and resistance, you want to drop down to your weekly time frame. You understand? You go down to your weekly time frame. I'm just teaching on what is it called? How to use trend line only. So once you drop down to your weekly time frame, is this clear enough? To me, there are no how will I say? I don't have any other points to keep. I thought I can put here, but it's going to be too close. So I want to drop down to my what? Okay, let me use it. Let me just put one here. Let me put one here. Do you understand? Then you can actually use color codes. Do you understand? You need to identify when price gets to a particular level. Do you understand? But there's no need for that if you want to. You can differentiate with color. You can actually use your monthly time mark, use your daily time frame as yellow, use your daily time frame as red, use your whatever time as green. Later on, you know how to do that by yourself. So this is my daily time frame. You must not necessarily draw out the support and resistance on every time frame. Do you understand? You don't necessarily need to draw out the support and resistance on every time frame. So your daily time frame now has now given you the area of focus. Look at my area of focus here. Was giving you area of focus. So something like this, you want to adjust now, start adjusting your levels, not so much. I think this is just perfectly well here. And this is also not bad. I'll draw this down a little bit. Yeah. Then my daily time frame is it's not bad. It's not bad this way. So I can only see something here. You can see the way I'm doing this. I don't need to force things. Just draw what you can actually see on the chart. Draw out what you can actually see on the chart. If you can only see one, you are good to go. Something like this. You can see reaction points here, reaction points almost everywhere. You can see price got here, respected, it got here, reacted around then blah blah blah. Price has tested this level, 1, 2, 3, this is important, price is actually testing this level. So you drop down to your 4-hour time frame. 4-hour time frame, you don't want to shrink the chart too much. Just do something like this. So you'll be able to deal with your current price. Do you understand? Now, here we can easily see price was coming from the top to this zone. So it simply means this place is actually what your support level. It simply means price will either reject from here and start going up, or price will then break here. Once price break here, it means it will start selling to the downside. Do you understand? So your 4-hour level, we want you to bring out the targets. Let me see, this is just my target here. This is the next opposing level. This side is my target for the sales. If price breaks this zone, I'll be expecting to short down to this period here, to this level here. But if price rejects from here, I want to take my long trade to either this place or this place here. You understand? But to be conservative, just bring it here and realistic somewhere. I think it's not too bad if you actually want to take your trade. If price rejects from here and gets to this level, it's actually not too bad. You'll be getting something like 6. 1:4, 1:5, which is quite a decent risk to reward ratio. Then if you want to short from here, maybe price does some things and after you want to enter your trade, you want to short somewhere around here. Let me see. These are just hypothetical risk to reward, don't worry. Then you want to enter around there, you put your SL on the next structure. I'm not doing entries yet. I'll teach for entries later on so you understand where to put your SLs and put whatever. So basically speaking, this is just all the ways to actually draw out your support and resistance. Then if you like, you can drop down to your 1-hour time frame to pick your entries, or a 15-minute time frame to pick your entries. I'm just using only support and resistance. You understand? So for that lessons you're talking about how to use your trend line, confidence to Fibonacci and like that. Basically speaking, this don't want to wait for price to something like this. Not, I'm tempted to about entry. So perhaps price might just do something like this. Then you understand? So then imagine you picking your entries from there, then you want to swing to this point, then you cannot see. And I start talking about top analysis, you see the beauty of top analysis. You can see before it was almost 1:5, but now you are getting something like 1:10. You can see. But we are not talking about entry, don't talk about entry, see the beauty of this. So what is I need to talk about? Nothing, peace out, God bless. Bye bye for now.